amazing viewers, welcome to Money Matters with K, and I still remain your delectable host, Kelechi Godfrey, and as always, you can call me K. Now, following up on our last episode where we talked about finance basics, we talked about budget savings, we want to bring back one of our guests so we can really hammer on the conversations about savings and investing, because we know that this is a crucial part in our daily lives that we need to take seriously. So, before I jump in, as usual, I will always want to ask questions that you can self-reflect on. So I have this question for you. How comfortable are you with your savings or your investment? Do you think it is something that you're proud of? Or do you think it's something that you're good with? Do you think it is something that can even sustain you on the long run? That is the question I want you to think about. And if you think you need clarity on that question, we are here for you as always. So stay tuned, don't go anywhere. We'll be back on the show. We're taking a commercial break, and I'll introduce you our lovely guest for today, who is going to take you on a journey on your savings and investment. Stay tuned. Hello, amazing people. My name is Godfrey, Kelechi Godfrey, and you can call me K. I am a banker with over a decade experience with Nigeria's foremost financial institution, a certified financial educator, a young man with an acumen for business and financial intelligence. Let's just say I am the first financial educator you should have met and the last you'll ever need. I am the host of Money Matters with K on Universal TV Africa, where we discuss your money, my money, and the government's money. Without further much ado, let's get the show on the road. Hello and welcome back to the show. This is still Money Matters with K, and I still remain your amazing host, Kelechi Godfrey. And as usual, I'll tell you, you can always call me K. And our guest today is an investment advisor, a wealth management expert, and also a finance expert in the area of personal finance. I'm talking about the one and only, the delectable Olori Adewale from our previous episode. Hi Olori, it's so amazing to bring you back on the show.
Hi Kay, how are you doing?
I'm okay, as usual. We had so many wonderful conversations that, we didn't really get to go in proper because there were so many angles. But today, you see in today's episode, we're going to talk about this savings thing and this investment thing. Because I've noticed that many young people, I won't say people like me, but many young people watching the show have the angle where they need to work on, especially when it comes to savings and investing, right? So without further much ado, let's go in. Let's kick things off. Now, I want to ask, is there a way I can save money and still get interest on that money that is being saved? Is there a way I can save and still get returns on those investments, on those savings?
Okay. Yes, thank you once again for bringing me back. Well, we have different types of savings accounts. Okay. The normal savings account that you put your money and you get deductions from, those maintenance charges, CM charge, and all those. True. It's also savings account.
Yes.
Then we have high yield savings accounts.
Okay.
Those accounts are actually accounts that is being given out as maybe loan, or is being invested in treasury by the bank. It's still being managed by the bank, but you don't have control over it. Okay. All you know is that some of these accounts give you returns, they give you interest. Some of them do 6%, some of them do 7%. It depends on the bank.
Okay.
And it also depends on the duration that you're leaving that money there as well. Because you see, there's a difference between fixed deposits accounts and also high yield savings accounts. Okay, some high yield savings accounts, you can make withdrawal between 6 months. You can make withdrawals not as frequent as you would like to do, like your savings account.
But you have the opportunity to draw money once in a while from it.
Exactly. But you see, when you put your money and say, I'm putting my money in a fixed deposit account, it's also a savings account. But the thing about fixed deposit is that if fixed deposit is for 1 year,
you cannot touch the money in 1 year.
Like, there's no emergency that can take that money in 1 year. Even if you're going to withdraw within that 1 year, the bank will still charge you Some banks will take 20% of the capital. Some banks will take 30%. So because of that, you know, it's one of the ways people that the older generations, when they want to get disciplined with their finances, they put
They
their money
use
in
the fixed deposits.
Exactly. And fixed deposits, as some fixed deposits has high returns. Not that high now. You know, when we talk about savings, like I always do, I don't advise savings. But that does not mean you cannot have savings. Okay. So some of these savings also still do 10%. As is now. But with the last NPR meeting, once how like the central bank is actually I think it's
Readjusting all the rates.
readjusting on all these rates. You get all these rates. So fixed deposit account will give you good rates. I use savings account too will give you good rates. But it's still your normal savings account. Now, I once heard of someone telling me that they don't want to touch this money and they're just putting it there. They're saving it.
And there's no interest on it.
But there's no interest. That's the thing banks don't tell you. Sorry if I'm attacking back. But seriously, that's what banks do not tell you. Sometimes they'll just tell you your pin. But if you go back, you find out that the 100,000 naira that you might be putting, some charges have actually been entering. You know, ATM, the one, even though you don't have ATM on the account, you know, some debits that like account, electronic levy, all these things, you get, there are charges that come with your normal savings account. But if you want to avoid all these charges, then label which kind of savings account you are doing.
Okay, so you're telling me now, instead of me just opening an account with the bank, I can tell them I want this particular kind of account.
Yes.
And you know, they don't tell us about this, you know.
Of course, but you have to ask questions.
That's why it's always good to ask questions so you don't go missing.
Exactly. Knowledge is power.
Knowledge, my sister, knowledge is power. So moving forward, we established a fact about emergency funds the last time. But at the same point, we don't. It's one thing to always save for an emergency. Can't we save for other things too?
Of course, you can save to buy a car.
Okay. So you're saving for it. Okay, you're saving to spend.
Spend. You can even save to spend. Like now, you want to go on vacation. You're saving to spend on the vacation. You're spending.
So I am saving money to spend in the future.
Exactly. I once had a goal that was to go on a vacation in the next 1 year, and I was saving. I asked the travel agent what the cost was. I asked everything that I needed to know concerning the trip, and I started saving every month. Even Waka now actually does it for people. They will tell you that if you're traveling the next 3 months, they will tell you this flight ticket, you can book it down, and they will split it into 3 months for you to pay. That means you're saving towards that trip.
That trip.
Exactly. So it doesn't have to just be about emergency. You can save also for your children's education if you're married. I don't have kids yet, but my children are already millionaires because I saved for them. And they're not even here yet.
Will you adopt me?
Stay waiting.
I'm still young. You can adopt me. At least let me also be in the millionaire wagon.
Yeah, old. So it's just not about saving for emergency. You can save for things that are very important to you. Your electronics, your furniture, you can save towards it. It's even better than, see, there's this thing that takes people's money, that people fall victim to. All this buy now, pay later. I used to tell people, instead of doing buy now, pay later,
why not save now, buy later?
Exactly. Then you now say, hey, if I save, what if the price of that thing has actually increased? But you can go there and negotiate. That's the power of negotiation.
True.
You can go there and tell them, I want this laptop in the next 6 months. How much would you give me? This fixed. You get, then the person can tell you, some of these electronics stores, they will tell you they will have 4% interest on that savings.
On that same
savings. And at the end of the day, you save it and collect your laptop at the end without having to commit collect them or borrow.
No, I got a new something from what you said. Instead of buy now, pay later. Why not save now?
Save it. Exactly. Buy later. Simple.
It makes so much sense. And there's no stress. You're not putting me under pressure. Because if I buy now to pay later, I'm under the pressure that I bought this thing on credit. I need to pay. So it's more like I've already eaten my money in the future beforehand.
Exactly.
Now imagine if I now decide to change my mind. I don't want this thing again, Nuko.
Thank you. Then you now start history quarter. You cannot collect your money.
You know, there are people that do this buy now, pay later. They start regretting. Why did I even buy this in the first place? You know, peer pressure is very powerful.
Very, 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 very. And that's why you need to be very careful.
True, I agree with you. Ladies and gentlemen, please would like to go on a commercial break. We'll be back in a minute. This conversation is solid. You need to listen to this. So we'll be going for a commercial break. We'll be back in a minute where we continue questions about savings and investment. This is still Money Matters with K on UTV Africa. Don't go anywhere. Don't touch that dial. Hello, amazing people. My name is Godfrey, Kelechukwu Godfrey, and you can call me K. I am a banker with over a decade experience with Nigeria's foremost financial institution, a certified financial educator, a young man with an acumen for business and financial intelligence. Let's just say I am the first financial educator you should have met and the last you'll ever need. I am the host of Money Matters with K on Universal TV Africa, where we discuss your money, my money, and the government's money. Without further much ado, let's get the show on the road. Welcome back to the show, and if you're just joining us, this is Money Matters with K on Universal TV Africa. I still remain your delectable host, Kelechukwu K Godfrey, and I still have with me in the studio the beautiful, the most amazing, sensational Olori Adewale Flex of the Money Flex tribe. Olori, the information you've been giving me so far, you deserve a plate of nkwobi. Take it from me.
I'm waiting.
But I'm not the one making it, sha.
Before, why?
Come on now, come on.
Yes, that you're going to give me something.
I will give you something, but
Bros,
you know, Mama.
Please, after the show.
Okay, after the show. Let's quick. We've talked about, savings aside emergency and savings to spend. Well, let's talk about saving to invest.
Yeah.
So, if I was to save to invest, right? I know that I cannot just save money now and carry it to invest. I have to save for a period of time to allow my savings to build, right? Now, what are the different things I can invest in?
Okay.
Because I feel many people have issues when it comes to this investing area. There are so many investment scams and bad investments going on left, right, and center. I could remember the one of almost a decade ago, MMM.
No.
I remember how MMM really, took a toll on people's finance. So help us out. What are the financial instruments that people can jump on as time goes on?
Okay, so there is, when we talk about investments that you can actually invest, you also need to think about your risk appetite as well.
Okay.
Because you see, every investment is actually tied to your risk appetite. So now I'm going to just give you different investment that I'm going to put risk appetite with it to help you better. So we have the low risk person, we have the medium risk investor, then we have a high risk investor. Now, when we talk about low risk investor, these are people that don't want anything to touch their money. I want my money safe.
They want their principal safe.
My principal, if I put 100,000, even if you don't give me interest,
give me back 100,000.
Exactly. And there are instruments for that, like federal government savings bond.
Okay.
So this federal government savings bond is a way that the federal government borrows from the public.
Okay.
Okay, and it ranges from 2 years to 3 years. So the return is actually split 4 times. They pay you returns 4 times, but the money is fixed, because the instrument is a fixed instrument. That's why we call it. So bond is like an agreement.
An agreement.
Yes, that you are holding my money for this period of time. So federal government savings bond actually preserves your capital. There's nothing wrong with your capital. You even get returns on it, but your interest is fixed. Now that's on that part of preserving your money.
One thought. So if I put ₦1 million into the federal government savings bond, what will I be looking at?
Okay, I think the last auction that came out in I think last week or this week? I think it was doing around 18% thereabouts for 3 years. There's 18% for 3 years, then 17% for 2 years. So that's 70%. Now that's the funny thing about this interest. It's not interest. So this interest is divided.
Into 4 parts.
Yes, into 4 parts, which they now pay you every quarter. That's the good thing about the federal government savings bond. You get paid every quarter while your capital is still sitting with the federal government. Okay.
So I'm getting money entering now. They are with my 1 million, but I'm getting returns
yeah.
on that 1
1
million
million
every quarter.
quarter.
So is it the 70% or it's 17% divided into 4 parts?
Yes, 70% divided into 4 parts. Sorry, it's
So
annual.
it's like as if they're paying me salary.
Yes, a lot of people do that. They actually wait every quarter to get their dividend, their returns. To actually, there are a lot of people that I don't have this money. I don't want to touch it. I just want to relax. So every quarter I get paid this dividend, and I go and enjoy my life.
So instead of doing even the high yield savings account,
Exactly,
there is something else I can put
do.
in that is still safe.
Exactly. When I said earlier that as much as high yield savings account is good, you get it's to me it's like you giving the money to the bank to borrow, to just use. Why
And
don't
then I
people
give you
give it
peanut.
and then not give you peanut like 6%, 7%? Whereas you can also give that same amount and give it to federal government and they'll give you 17%, 18%, and they'll still pay you 4 times. Which is cute, right?
I hope you guys are getting sweet sensational knowledge. I hope you guys are getting. So let's keep going
let's
forward.
keep going. That's federal government savings, but
That's one.
That's one. Then there's treasury bills. Now the cute thing about treasury bills is that it's the interest is based on how long you want to leave your money.
Okay.
That's why we have 91 days, we have 182 days, we have 364 days.
Okay, so we have 3 months,
3
6 months, and 1 year.
Yes.
We don't have 9 months.
That's 9 months, yeah. So the thing is, during this period, you're also giving your money to the government as well via CBN. Okay. So when you give your money, they also pay you. So now the difference between federal government savings bond and treasury bills is that you can get your return upfront while your money is there.
Okay, so the federal government saving bonds comes in its own period.
Yes.
But the treasury bills is upfront.
Yes, you can collect your money upfront.
So I can put 1 million and get my money by like next week, my interest like next week.
Yes. And that interest, you can enjoy. But the thing about collecting your interest upfront is that your interest rate is lower. Rather than you collecting it at the end, that's the back end. You're taking it at the end of the
so you're collecting it with your 1 million together.
Yes.
So if I'm doing like for 3 months, I can do 3 months, and I choose to take my money at the end of the 3 months, not at
the beginning. It depends on you. That's the option that comes with.
So at the end, I get 1 million plus.
Yes.
So in the beginning, I just get my interest, and at the end, I get my 1 million.
Yes.
Interesting.
That's the difference between federal government savings bond and treasury bills.
And this one is not 2 years; it's just 3 months, 6 months,
6 months,
1 year, 9 months.
It's very, very. That one is very easy, but another difference is that the amount to put in them. For treasury bills, I know it's minimum of like 100,000, depend on the bank you're doing with. Then with federal government say 5,000 naira. So some people they'll say, 5,000 I can afford right now, and they can just put it. So it depends on what you can afford.
So for minimum investment for the federal government saving bond is 5,000 naira.
Yes.
So which means even my children can invest in federal government saving bonds.
Of course.
Now the minimum for the treasury bills is
100,000. Yes.
So which means someone in university who gets a small stipend can put them together and actually invest. So you see, investing is not even rocket science
at all. It's not that deep. It's like it's not deep.
It's not deep. it's not
deep.
Physics.
Yeah.
All right. So we have federal government saving bonds. We have the Nigerian treasury bills.
Yes.
So what else are we looking at?
Another investment is mutual funds.
Okay, mutual
funds. So when
funds.
we talk about mutual funds, so mutual funds is bettered from the idea of ajo, esusu. When we talk about esusu, that was the years when you bring different people's money together
and you give one person.
That idea. So idea of mutual funds is that you bring this money together. Instead of giving it to one person, you give it to a fund manager. You get? So there are a lot of fund managers in the country. You get? I can't mention their name. But the thing is, we have fund managers in the country. So those fund managers take this money now and now look at instruments that they can put the money into. So after a particular period, depending on what they agree as a collective body, after a particular period, then the fund manager brings back that money with returns, and they split it among those people. So the idea of mutual fund is, if you have 5,000 naira, you can be in the pool. If you have 10,000 naira, you can be in the pool.
And you can eat the same returns.
Exactly, but the difference is that
The amount you put in.
exactly your amount that you put in. So that's the idea of mutual funds.
So the person that's bringing 1 million is in the same investment pool with someone with 5,000.
Exactly.
So as long as money is being made, everyone is now eating the profit based on their principal invested.
Exactly.
But the truth is, everyone is making money.
That's it. So even in that mutual funds, we still have some high risk mutual funds too. Like we have like medium risk mutual fund, I'll put it, because some mutual funds are exposed to the stocks, which I'll be mentioning when I'll be talking about the medium risk investment. Okay, but there's a mutual fund that is exposed to no risk, which is the money market fund. The money market fund actually comprises of, commercial papers. These are all. So the idea of money market is also loan.
Okay.
All these papers are actually loan. They're just contracts.
So it's more like, I am a businessman. I need finance for my business.
Exactly.
So I go to the money market and tell them I need so and so.
Now, what you're releasing, that's where we're getting it mixed up. So as you're a business owner, you can decide to release a commercial paper.
Okay.
So a commercial paper is a note that shows an agreement you get between us. So when you release your commercial paper, then you give it to a fund manager, and the fund manager can decide to put the commercial paper you get in a mutual fund. That's the money market fund. They put it, you get. Then the same thing, instead of that money market fund, there's still treasury bills. Even though you don't have money to buy individual treasury bills.
Like the 100,000 naira.
Exactly, but you can indirectly invest in treasury bills via money market.
Due to the pool you are in. So I have a question now. So if I'm a business person and I need finance for my business, all I have to do is create a commercial paper and say, this is the interest I am putting for whoever buys my commercial paper. So in buying the commercial paper, the person is getting the commercial paper, I'm getting their money.
Exactly.
At the end of the day, I give them back their money with interest and I collect back my commercial paper.
Yeah, perfect. But another thing with commercial papers is that when companies release commercial paper, you get some of them, the minimum amounts that they allow investors to put in it can be around 5 million above.
Okay.
But with money markets,
I see a particular business that was 2 billion.
Exactly. So in money markets now, you tend to invest in that same commercial paper since you don't even have So the thing about money market, even with as low as 5,000 naira, you can buy a money market fund. So this is when I said a pool and the fund manager taking it to the market, means that the fund manager is thinking about treasury bills. They buy a part. The pool, they buy a part of it. They buy treasury bills, they buy commercial paper. They now do a cumulative average of the returns that they get from these different, instead of buying it individually.
Okay, so in the money market, it's still a pool of people's fund.
Exactly.
But now it's not a pool of other investments, other financial instruments
In it.
Amazing.
Yeah.
Amazing. I mean, so we have the federal government saving bonds, we have the Nigerian treasury bills, and now we have the mutual funds, we have the money market.
No, the money market is under the
mutual fund.
Yes.
So we have three already. Are there still more that are in the
Of course, like I said it depends on your risk. Now when we talk about let me just leave that 3 there for the low risk person. Now if you're a medium risk person, that means you're open to a little risk. You can buy stocks. Now, what is stocks? Stocks is you owning a part of a company. It's ownership that you have in a company. Now, the good thing about stocks is, imagine us in the studio now. Us here, we own this studio. Then we decide that instead of putting just our own capital as a person, as a partner, then we decide to bring in other people to buy. It's like a pizza,
So everyone takes a slice.
Exactly. Now, another good thing about stocks is that now there are some stocks that are very expensive. Instead of you now thinking about, this stock is expensive, how do I own one? You can now do ETF. That's exchange traded funds. Now, exchange traded funds is also so it's a basket that owns different stocks in it. Meaning that instead of you buying Apple of over 300,000, you're buying Nvidia or buy all these other stocks. Sorry, I'm mentioning these companies. You get their companies, or buying, okay, let's use UTV at this amount. I can decide as a fund manager that I would like to have a collection, no, a basket.
Basket of every. Okay, let's use UTV for example. A basket of every telecommunication of every TV company
exactly,
in Nigeria
in
one
basket. And now
so instead of just buying just UTV alone,
I just said that I want to buy everything like that, and inside the basket.
And it's very cheap to come by.
Yeah, it's cheap.
So it's like a unit of every or a part of every company
is being
in
put
one
in a
place.
basket. Yes, exactly. Then so that's for a medium risk, so that we don't spend too much time. Then we have high risk.
Okay.
High risk is example is cryptocurrency. The baba of them. You know, a lot of people will tell you that
Bitcoin,
bull run, exactly, tap, all those things, mining, all those things. You know, crypto is a very high risk investment.
Okay.
Very, very high risk. If you don't have the shoulder to take a lot of pain, because you can lose your money today and you can make a lot. That's shock absorber. You have it in you. If you don't have it, do not do an high risk investment.
So someone said if you're doing crypto, always make sure you're checking your blood pressure.
Exactly. Or better to just forget it.
Just forget it.
That's it. Just forget that you have money. That's why they will tell you that if you want to put your money in crypto, you can put only 5% of your portfolio, expose 5% of your portfolio to crypto. Okay?
Wow. So now the idea of high risk, what are the pros and cons of high risk? What is the advantage of doing a high risk and what is the disadvantage of doing a high risk?
Okay, so the thing about high risk is that you make money. You know,
like
when people
plenty money.
It's not
like doing NTB or doing
exactly. Those ones are small money. In an high risk investment, when you invest in an high risk investment, you can make the money you put in treasury bills, you can make like 3 or 4 times or 5 times of it. Sometimes we say the higher the risk, the higher the returns. But sometimes too, like you said,
as you are putting so you can lose all your money.
Too,
the way you can make times 3 times 4,
yes,
the same way you can lose all
your money. Yeah. So that's it about high risk investment.
Wow. I hope you grabbed some nuggets. But before we walk away, let's do a recap on the do's and the don'ts we've learned from today's show. All right. So for some things that I'm looking at as the do, always make sure that first of all, there is money kept somewhere for anything you want to do. There's money kept for an emergency. There's money kept for business. There's money kept to spend. And for the don'ts, please, anything you know that you don't know about, do not invest in it. Because just like this now, we've already talked about some basic investments that you can actually do. The next thing we hope you can do is to research on these investments before you go in, so you don't end up losing your money in them. Olori, I want to say a big thank you for coming on board. Thank you for being on the show. And this is still Money Matters with Kay. See you next time. Same place, same station. Don't go anywhere. We're always here for you. Your one-stop place for financial knowledge and financial education. My name still remains Kelechiko Godfrey. You can always call me K. And I still remain the first financial educator you should have met and the last you'll ever need. Stay jiggy and keep your steez up. Do have an amazing day.